Going on, everybody? Billy here of Storm Trades. I'm just going to go through another trade recap, bring you through my simple process of establishing a daily bias, reading the high time frame market structure, and how I find my invalidation to the narrative, and ultimately how I found my trade executions for Monday, April 28th trading session in the AM. Here we go. All right, so here we are starting on the daily. I'm looking for the obvious. What jumps out on the chart for me? Where are we delivering from? And what are the draws on liquidity? And right away, I see we're delivering from a daily bearish fair value gap. Right. All right. So price moves from internal liquidity to external. Well, where's my closest external liquidity? What's right here? We've got a swing. We've got a daily swing low right here. And this is looking at it from the night before. So what we also have as a draw on liquidity is the previous daily low. Okay, that's it. My daily bias is done. That's how fast it takes. That's how fast it goes. I mean, there's really nothing else to it. And then we move on to the hourly. Okay. So what I'll do here is just clean this up a little bit. There's the previous daily low. Here's the swing low, which is our ultimate target. Okay. Now, just because I'm bearish on the daily does not mean I'm automatically bearish on the hourly. The hourly, I go through the same sort of checklist. Where is price delivering from? Is there a change in the state of delivery, and we're trading through or getting support from? And where are the relevant draws on liquidity? All right. So as I move forward here, and we move in, it's 9 o'clock, 4 a.m., 7 a.m., 8. All right. Now I start to look at 8. I want to start setting up my charts. I want to take a look at, where is price currently located? Well, right now we're currently located inside of this bearish hourly fair value gap. Okay. We also have closed below this hourly change in the state of delivery. I will start looking at potential shorts. Again, targeting the previous daily low and the daily swing point. So I'll go down to my execution time frame. Let me clean this up a little bit. You can see we're currently inside the hourly bearish fair value gap. Here's the daily fair value gap that we're still delivering from. And down here is the previous daily low and our ultimate target. We don't need a trade to go all the way down here. We just need a clear draw on liquidity. That's all I need. All right. Now, I start trading from 9 o'clock, and I'll trade oil till about 1 p.m. I'm looking, at this point, I'm watching price, and I'm almost exclusively watching the execution time frame, and it's because I've already engaged the higher time frame POI. Okay, so let's move price a little bit here. We're watching, and we're taking note of any swing highs that get run. So far, there's nothing. Starting to come back up into the bearish fair value gap. We've already taken some liquidity here. This was a hourly. This was a excuse me, a 5-minute swing high. And boom, we've taken this previous hour high right here, and I'll mark this out as a potential liquidity raid. All right. Now, for an idea to come to fruition here, I'm going to need a close below this series of up-close candles. Maybe that would be the change in the state of delivery on the execution time frame. Right? So have I switched my bias bullish? No. We talked about invalidation. My invalidation for this was a strong hourly close through the bearish hourly fair value gap. Had we done that, I wouldn't necessarily have started looking for longs, but this idea that I had with regards to what narrative was playing out would have been, in my opinion, incorrect. So I'm keeping that in mind. Move price a little bit. All right, we just had some displacement down. I'm looking for a close underneath the change in the state of delivery in order to get interested. At this point, I sold the contracts here. I put above the breaker, and I saw it. 2R. And it happened. It delivered fast. Okay. Now you can be done for the day. Okay, I was there. However, if you had continued to follow price down to these levels down here, we got another entry, at least one more entry here, and I'll show you how I would find a continuation entry. When I'm looking for continuations, I'm looking for moves up into liquidity. That includes fair value gaps and also swing highs in this particular case. So as we move price forward here, we've just developed a swing point right here. So swing high. I'll be watching that. Okay, we just swept it here. Now, just like we did above for the CISD candle, this series of up-close candles that swept that liquidity, if we get a close below these, I could get back on sides on a trade. We still have this draw on liquidity down here. As long as there's still a draw on liquidity, the trade idea, in my opinion, is still relevant. So, all right, now at this point, we got a strong close below it. I wouldn't. That's too much risk right there. So I would want to see a retracement, maybe to test the order block. And we get one right there. High above the series of down close candles here, the take profit, all the way down to the swing low, targeting 2R trade. Let's see if this works out. Boom. When we have a clear draw on liquidity, we can keep taking the same trade over and over again. Ideally, you get in up here and hold all the way down, but when you're trading funded accounts that have a trailing drawdown, it's good just to get out at 1.5 to 2R. And if you find another solid setup and the draw on liquidity has not been met yet, that's when I'll get back on sides. All right, that was it. all these trades were taken inside a Unicorn University. I'm there every day, trading with all the maniacs. And you guys have a great day.